Where are David Solomon's haters now? The Goldman CEO had a ton of them back when his pet project, a push into consumer banking, fell flat. But now it's undeniable. Goldman Sachs is absolutely on fire. It just reported record quarterly equity trading revenues, and its investment banking fees jumped 70% versus the same period last year. Other big banks like Bank of America, JP Morgan, Morgan Stanley had strong quarters too, but Goldman beat them in several areas, and especially in stock trading, where revenues were a record $4.3 billion, and that was up 36% against last year. Now, Goldman is in a really good spot for lots of reasons. Market volatility has been high, hedge funds have a voracious appetite for borrowing, and it's also very close to some of the fast-growing kind of electronic new firms like Jane Street. But it's not just about market tailwinds. Solomon is demanding Goldman get more business from more of its biggest clients. In an earnings call this week, he said that Goldman is now a top 3 broker for 125 of the 150 biggest trading clients in the world. In 2019, he was only top 3 with 77 of those. Solomon has also been pushing his bankers to lend more to more of these big clients since he took over as CEO in 2018. And that's because that's meant to be a more durable source of income than just standing between buyers and sellers. And after all, borrowing by hedge funds in the US hit a record level this year of $5.5 trillion in the first quarter. But the boom in borrowing is making central bankers and watchdogs nervous. And that's partly because it's increasingly concentrated among a smaller group of ever larger funds. And that does open up Goldman to some risk in the future. But right now, the bank is back to doing what it does best. And Solomon's critics don't have much to say.